Morning everybody, how are we doing? Oh, mic's a bit low, isn't it? Hang on a sec. I'm late as usual on Thursday. It's always late on a Thursday. There we go. Hopefully you can hear me now. Stupid computer. How's everybody doing? Alright? All good? Excuse me. Right, so I'm just sitting here sweating because I just finished my spin class. That's a nice sight for you in the morning, isn't it? That's just what you want to hear. Morning. There's a sweaty man on a microphone. It takes me about an hour to stop sweating after a spin class. It's hideous. Right, let's have a look at where we are. So yesterday we had FOMC, yesterday evening. Morning Hank, morning Diamond. Is your mic in another room? No. Hopefully it's working now, you can hear me. Burke, Diamond, audio's better now, yeah. I have to turn it up, it's because I've only just booted the PC up this morning, so normally I'm ahead of it and prepared. Good afternoon, Peter. Right, so yesterday we had FOMC, we had loads yesterday. Yesterday was news day, loads of volatility. It's been a really good week for volatility. We've had lots of movement up and down all week actually. Yesterday we had a lot of reversals. Remember I said on Monday what we quite often get on an FOMC week or a big week where we've got news in the midweek is we get a midweek reversal, so we have a push and then a reversal. We got that on a lot of stuff yesterday, which I kind of built up positions for and got out of yesterday, which was good. News, nothing happened on FOMC. FOMC was basically very much a business as usual comment last night, the FOMC meeting minutes, which fantastically, oh there we go, I was going to say didn't get back to, but all we get really is business as usual, looking at rate hikes as normal. Nothing bullish, nothing bearish, just very much business as usual. Morning, I can't say your name, Uche. Morning, Stevie. So there was no clues yesterday, bullish or bearish for the US dollar. So it's carry on really as kind of neutrally, slightly strong US dollar. I think it's very difficult to read the US dollar at the minute. But morning, Jeff. Yeah, afternoon for you, Peter. Morning for me. So I don't think there's any, there was no movement obviously off of the US dollar, a little bit of a spike as you always get with FOMC, but nothing dramatic. So yeah, just business as usual. Overnight, not a lot with Japan. And we've had a couple of red newses come in early morning. Oh, blimey. Taiwan's independence is not supported by the US. Top US diplomat for East Asia, Crittenbrink. Oh, Crittenbrink is his name, right, okay. I was going to say, where's Crittenbrink? Yeah, so not a lot of news really overnight. We had the Aussie unemployment, which didn't really do a lot either. Going to continue to hike rates with the ECB, which is, we know all about that. Inflation is hard, it's going to have to keep going up. We know all about that. A little bit more of an inflation in the Ukraine crisis. So yeah, nothing particularly dramatic. So we had all the CPI figures, New Zealand, everything's kind of as is. We had loads of movement on the Aussie pairs yesterday, 175 ADRs on the Aussies. So yeah, big moves. Unemployment this morning. The only news we've got today is Philly Fed. Philly Fed does move the market, not dramatically, though it's the manufacturing index, so it's not a big driver for the US. The US isn't a massive manufacturer, obviously cars and things like that, but there's not a lot of other massive manufacturing goes on, so it doesn't have a massive impact on the currency, but it is used in the scorecarding system with the banks, so it will affect the scorecarding if it comes out dramatically different. Apart from that, we've got unemployment, and that's it. And then there's nothing tomorrow. We've got retail sales for the pound, and we've got retail for the CAD, which again don't tend to do a massive amount. So we've got nothing much more news-wise for the rest of this week. So yesterday had lots and lots of stuff going on. I'll cover my Forex funds account first because it's faster. Yesterday closed out Aussie dollar Swiss, where are we? 17th. So closed out pound New Zealand loss. So pound, obviously New Zealand, we had the news with New Zealand and all the Aussies dropped dramatically, so everything pumped against that. So I took one loss on pound New Zealand. We've been in accumulation since New York. Hopefully they're just going to take the liquidity from yesterday's high and start to do a reversal. We've had 3 up days on this now. So 4 up days, well actually no, it's today. So we've had 3 very big up days, beautiful V-shaped recovery. So we should get a down day today. Sad enough, so we could get another day up, but we are due a pullback on this one. So hopefully today we get a nice drop on that. I've just realised I've got no RSI on here for some reason. Yes, I have. I'm being an idiot. It's down there. Morning. So yeah, pound New Zealand took a loss on. Aussie dollar Swiss closed out 2 on that one. It's dropped a little bit further. I closed those out because I had basically $300 in profit on those. I just wanted to make sure I shut them. We'd hit ADR basically, so I was worried about a pullback on this one, so I just closed those out, but it's carried on a little bit more. And I closed out a couple of DAX. 2 DAX shorts, one there, and that down there. So yeah, lovely drop on the DAX yesterday. I ran this all the way down yesterday, completely milked it, got out of everything yesterday. It's lovely. So situation at the moment is banked 0.45% yesterday, up 1.35 on the account. Got an 8% target, so I'm miles away from target at the moment. I've got 30 days to get there, so I need to get a wiggle on. Sitting in 1.5% drawdown at the moment, but as you can see, that is all pound New Zealand. So I really need the pound to have a catastrophic day, or I need the New Zealand dollar to go crazy and pump like hell. That thing is just not stopping, and as I say, that's the one we just looked at. We've had 3 days on the trot. The problem with obviously this my Forex funds account is I'm getting in quarter ADR spacing, which means that and on M5, which means that I'm getting in very fast, which means you get in and overloaded very fast. But you've got to get in fast with position trading because you've only got 30 days to hit the target. So I'm on a time constraint, and that's why we're having to get in aggressively. And obviously the more aggressive you get in, the more dangerous it is. Hence it being in a dangerous position. But it will take literally 1 ADR push on that, as you can see. If we get 1 ADR push down on that, all gone, out, profit, done. So literally looking for an ADR move. So that's my Forex funds, that's where I am with that one. I banked 2.27% in the end yesterday. I did tons and tons and tons of drawdown control on this account yesterday. 17th, where are we? All the way down here. So I'll quickly whiz through them. There's one there as well. Aussie, New Zealand, start off with that. New Zealand dollar must be very weak. Yeah, it's very, very weak off the back of the news yesterday. Obviously, yesterday's inflation came out at 3%. I was expecting that to be neutral strong for the New Zealand. Both Australasian pairs tanked, so the market didn't like that. Didn't think it was obviously on top enough. I don't know. sure how inflation is going in New Zealand, but 3% is well ahead of the curve compared to the rest of the world at the moment, and it's a small country, so I'm quite surprised they reacted that way, but it will all undo. So yeah, Aussie New Zealand yesterday. So closed out this one as a nice little profit. I had a little loss that I took there, and I closed that one out there. So exited those two positions in profit. This one was an accidental entry. You can see I've got a buy there. There was another buy there, which was just underneath. It was a manual one that I took because I didn't think the EA was far enough away to trigger, and the EA actually did trigger on it as well. So I got in one by accident, which is this one here. So because these two were so close together, I shut this one down, just took a quick $40 loss on it. It was an accidental trade, so it's not a loss, it's just a cock up. Oil, we'll cover oil next because the DAX is huge. Oil, it's all that lot. So with oil yesterday, obviously oil and the DAX I was over leveraged on. Oil I got back into a position where I was quite happy with it, but I decided to do some more drawdown control on it anyway, just to get fully on top of it, because I'm not here tomorrow, and I wanted to get my exposure down, and I wanted to get my drawdown down basically. So I did a bit more drawdown control than I should have done yesterday, just to get really on top of everything. Using the profits I got from the DAX, which I'll show you in a minute, I've done drawdown control on lots of stuff. So looking at this one, if we go to H4, it's where you need to go to actually see some of these trades. This one and this one here were the first entries that I took on oil, where I was expecting basically to get the bounce off of 95 a barrel and get that push. That push didn't come, obviously, which is why we've been sitting in drawdown milking this thing for the last few weeks. So these positions were 0.11s, and I've gradually been doing drawdown control on these. As you can see, I took some off of that one there, and that one I took some off of there and somewhere else. Sorry, not that one. That one there, I took some off there. Those two I reduced down again yesterday. You can see I took some off here. And if we go down to M15, took some profits on a position there, which was an aggressive position, which was a 0.2. Had a little bit there, which was a loss. Had one there, which was a break even. Had one there that was a loss. So there was lots and lots of trades going on it. But at the end of the day, I took a decent profit on this push. Yeah. So I had that one on there. Oil pushed on the oil inventory news. It got me up actually into profit on it. But I didn't want to get out of it. I'm still quite happy being in it. So I took that profit off there with a trailing drawdown, a trailing stop, and yeah, nice little profit, and we're just accumulating at the moment. So everything that came out oil-wise yesterday was bullish. We've got constricted supply, we've got demand increasing, we've got barrel production and barrel storage down. Everything was like bullish as you like, and I was expecting, and it went, I was expecting it to fly yesterday. You can see my TPs were up here. We didn't get it. It literally said, yeah, this is really good for oil, and then all of a sudden it came back down and returned to origin, and then we pushed up and we stayed there. But the good thing is we've pushed up and we've broken above this high yesterday. So we had a bullish day put in on oil finally, and now we're just sitting there in accumulation. The danger today is they come down and try and run this liquidity. If they do, I've got a buy limit set right at these lows to see if they can run that liquidity and go from there. If they don't run the liquidity, we're off and I'm in profit anyway. So oil's looking good, but as you can see, it's the first bullish day we've had. It's not really even a bullish day, it's more of a spinning top. But it is the precursor. If you look at previous, we have this is what we call a pause day. So basically, a doji or a spinning top is a pause day. It's like not sure about being bullish, not sure about being bearish, and typically they are the precursor to a reversal or a pullback. So we should get a bullish day today out of oil. So that was oil. Pound US dollar, closed a couple of those out. Sells, one there, and there's one there which I closed out as well from ages ago. So I closed out 2 positions. Crikey, where was that? All the way back there. From a couple of weeks ago. So obviously this is the one, same as the US dollar CAD, this is one that I got completely stuck in. We pushed up, and since we pushed up, we literally have gone nowhere for 2 weeks. This is where the move started. We're back to where the move started. What is it? It's 2 weeks? Is it 3 weeks? Don't know. 3 weeks, isn't it? 3 weeks. We've literally gone nowhere. I've been milking the hell out of this thing. As you can see, there's more trades in here as well that I've taken profit on. All this lot. You know, just made loads and loads and loads of money out of this pound US dollar because it's not gone anywhere, which is lovely. Anything that goes into a range is just milkable. And I've still got a couple of positions on it. So I took those off, which was good. US dollar CAD went flat on US dollar CAD completely yesterday. So took the final positions off of that one from there, and from all the way back there somewhere. Took the whole lot off, break even, flat, gone. Because this, again, same thing, I'm fed up to the back teeth of it. It's just gone sideways. I've made loads out of it. But I've also got myself into a bit of drawdown on it. And as you can see, I've had to do a fair bit of drawdown control on this one as well. So did some drawdown control on that with all the profits gained on that move there. So it's been really good US dollar CAD. I've made about 4.5%, 5% out of it. But I'm out and flat now. I want to reduce my US dollar exposure ahead of FOMC, which is why I did that. Think it's better as with position for NU. I'll have a look at that in a minute. Morning, Fabio. Right, and so then DAX is the last thing. They closed yesterday. Loads of DAX, loads of it. Just went crazy on the DAX yesterday, which was lovely. Still going. 17th, that one as well. Is that it? Yeah. So DAX, I was over leveraged on this one. So I had quite a few positions going back, obviously, where I started shorting it back here. This is the first initial position down here. I think that's the first one. Yes, it is, yeah. So that's the first position. And we've basically had a week solid where we've gone up, haven't we? 4-day push. Remember what I keep saying? This is a perfect example. If you ever want to etch something into your head that I say over and over again, price climbs up the stairs, falls down the elevator shaft. Yeah, you're just waiting for that 1 ADR drop to get out of your positions. Yeah, enter, exit. Market is buying, profit take. Yeah, it's just how the market works. Look how early I got out on this. So I made a fortune on this yesterday, and I got out and left all that on the table. Crazy, but it doesn't matter. My goal yesterday was achieved, which was to get on top of drawdown, which I've done, and to get a load of money in the bank. So yesterday we had this huge drop. You can see where I got out. I got out here. It started dropping in the morning and didn't stop. We just came down and down and down and down and down. We got down to here. We started, if you remember, I posted in the Telegram group, we put 2 big tails in here. Yeah, and I said, this looks like we may be starting to pause. This was 1 ADR. So ADR, and this is 192. That was 177. So this was virtually an ADR hit, literally in the middle of the London session, middle of Globex. And then we had a little bit of an accumulation and the thing just carried on tanking down. So really good trade. Managed to get out of loads of it. I had aggressive positions on that I'd entered the previous day. You can see, yes, the previous day I said about this one in the Telegram group, I had a nightmare this day. Yeah, Tuesday was a nightmare. I had beautifully placed positions on, which would have worked out gorgeous and hit TPs, but I just got stopped out of them, and there was that one there, and I just got stopped out. So I had a nightmare day, and then it pushed back up. So I entered those aggressive positions back on again. There's one in there somewhere, and I had that one from there, and I had that one from there. And these aggressive positions were 3.5s, which were normally I was 1.87 lot size. These were 3.5s. You see that one there, that one there, that one there, that one there, that one there. So these were aggressive drawdown control positions designed purely to either get me out of the drawdown, or to stop out at break even or with a small loss. You can see there's one failed drawdown control there. The failed drawdown control positions would be losses. Yeah, there's one there, loss. So you either take 1/4 to 0.5% loss on them, or they work out and you get out of your problem. That's what aggressive drawdown control is all about. So they all worked out beautifully, and obviously I did loads and loads of drawdown control, as you can see. Exited tons and tons and tons and tons and tons of this. Got my lot sizing back down to normal position size, which is 0.97s, and that's it. So back down to 3 on those now. 3 positions at normal sizing, and the same with oil, back down to positions at normal sizing. So all good. So that was yesterday. 15% month. I did 20% last month, just over 20% last month. 20% is an abnormal month. I don't normally do that. Normally I'm sitting somewhere between 5 to 15% on a normal month. 15% this month so far. We're only on the 18th, so I'm on target for another 20. But I'm going to reel it back a little bit for this final week, because 35%, 35% in a quarter is normally a damn good return, and I've done that in 2 months. So I don't want to get over aggressive, which is kind of what I did with oil and the DAX, and you saw what happened. I went into 10% drawdown fairly quickly, so you don't want to get too aggressive. So that was yesterday. Risk percent per aggressive drawdown positions. So with aggressive drawdown, when you get into aggressive drawdown, it is at a point where you are highly confident that the market is going to turn soon. So, a 4-day push on the DAX is not it's not unnormal, but we know that after 3 or 4 days of pushing, the market has to relax, it has to profit take. People are sitting there, speculators are sitting there with tons of cash. They start profit take moves. Profit take moves start selling frenzies start big moves down, which is the escalator shaft. Yeah, elevator shaft even. Escalator shaft. There isn't no such thing as an escalator shaft. So your aggressive drawdown control positions, I tend to start off with 50% of my lot size. So if, for example, I needed to get in hard on oil now, I've got a 0.28 there. So my aggressive drawdown control would be a 0.14 initially. Depending on how that 0.14 played out, if it went into profit, I may take another 0.14, which gives me 100% of that position with 2 trades, and my average would be there. So if that then continues to push down, I can quickly move to break-even average. Yeah, and I've got no risk on the trade, but I've got a aggressive drawdown control position, which will bring my average from somewhere like there up to somewhere like there. Yeah, so the idea of aggressive drawdown control is to get this average. I haven't got anything that is anywhere near needing it at the minute. So there, for example, yeah, if I go in with a 0.14 here right now, this will jump down to there somewhere. So to get out, I need one M15 candle. At the moment, I need 2, 3, maybe 4 M15 candles to get up there. But that's the point of it. And you use a stop. So the prime example and the way to explain it is here on the DAX, because that's exactly what I did here. Let me just move the candlesticks to the background so you can see the trades a bit easier. So these were the aggressive positions, yeah. So you can see I entered 3.5 there. And there's one, look, I entered that one. Here we go, look. These are aggressive positions. So I started getting aggressive there, failed. Started getting aggressive, failed. Started getting aggressive, failed. Aggressive, failed. So I had 4 failed attempts. This attempt worked, so I added, which worked, so I added. And it just stopped out. But what I did, as you can see, on these positions, I put the break-even average. So there's 0 risk for me. If we'd have got one more down candle off of this, yeah, I had plenty of breathing room between my position for a pullback and drop. And that's exactly what happened. Yeah, but I just got tagged. Yeah, so you're entering big positions, but you are keeping those stops on these positions. When that thing goes down to there, I'm putting that stop down to break even because it's a huge position. That's the whole point of it. It's either going to take a quarter of my profit or half of my profit away, as it did there. So I probably lost about 1% on that, but I made 5% on that. Doesn't matter. And I got out of all the positions. Well, not on that, but on that one, didn't I? And there's another one. Look. So got in short aggressive, it started working. Got in short aggressive, it started working. Brilliant. Break even stop. No risk. If this now had pushed down to TP, which was here, look on these 2 positions at the lows, superb. My break even would have been there. So I pulled my break even from down there all the way up to there with those 2 positions. But those 2 positions are 3.5s. So at the time, on the DAX, I had something like 15 to 18 lots on. Yeah. So taking multiple 3.5s, I'm trying to build up half of my total entry size, something like that. But there's no right or wrong answer. The answer is always going to be, where is your average? Right? How far away is it? Let's say your average is here, yeah? If your average is at 150 ADR, right, you need to get that up. If you enter with a short position, which is 50% of your total lot sizing, right, and your average only jumps up to there, it's not enough. So if that one works out, add another one on, and that will bring your average up to there. So now all you need is about a half an ADR move to get out of the position. Or not to get out of the position. Again, you don't get out of the position there. You can do if you want to, but what you do is you take the profit from these aggressive positions and you start to chip away at the ones that are causing you problems. As you can see, that's the whole point. I took some of this off, 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 I took some of this off. Using the profit from that one, that one, that one, that one, that one, where however many there are, but I used the profit from there, 50% of the profit from there, to reduce all these down. That's drawdown control. We're just controlling stuff that gets out of control. The out of control level is down to you, your personal preference. Yeah. For me, if something gets to 3% in drawdown, I'm thinking I'm wrong, I need to do something about this. And that's when I start to do aggressive drawdown control. If my entire portfolio gets to 8 to 10%, I'm thinking I need to do some aggressive drawdown control. There's no right or wrong. Sometimes I'll sit there in 10% drawdown and think this thing is so shot and extended, I'm not even going to attempt it because this thing's coming down like a brick soon. And I'll think, I'll give it a chance, I'll give it another couple of days and it might push me up to 11, 12, 13%. But it will happen. It has to happen because if the market doesn't take a profit on its positions, no one makes money. If no one makes money, what's the point in the market? It happens all the time. You just have to be patient and wait for it. But to answer the question, it's roughly 50%. So if I wanted to get aggressive drawdown control on this now, I'd be entering a 1.5 short. If I wanted to get aggressive on this one, I'd be entering a 0.14 short. If I want to get super, super aggressive, and I'm thinking this looks like the best setup in the world, we've just hit a level of resistance, we've just put in a 3-bar reversal there that's given us a reversal alert, RSI is extended, we've just hit ADR, there's confluence all over the place, we've got divergence on the RSI, everything is lining up, I'll get in with 3 contracts short, 0.3 short, I will get in with a whole lot short because it looks like the setup that is going to turn the market. I don't know, you just handle every situation as it comes up. There's no right or wrong. Morning Tammy. Every time you get stopped, you re-enter when you get a new breaker. Yeah, so basically, it's not always when I get a reversal alert.
Some of them will be reversal alerts, yeah. So this one here, that was a reversal alert.
That one wasn't. Yeah, that one I saw. The reason I got into this particular short here was because I saw this move, push up, roll over, drop, back down below there. So this is a false breakout, liquidity run. That's why I got in that position. Yeah, there's no reversal alert there. Sometimes I'll have a limit order set, so I'll have a limit order set there, which is incredibly aggressive with a tiny little stop, because I'll think either they're going to double top or they're going to liquidity run it. If they do that, I'm getting in aggressive with a small stop on it, and I might risk 0.25%. I'm risking, because we know that's what they do, isn't it? So it's not always on a reversal alert. The EA is trading for me every reversal alert, but if I see an opportunity that looks good, so if I needed to do drawdown control where I am now, and I've seen that, yeah, and then if we pushed up to there, for example, that is where I'd enter an aggressive position, because the market structure is confirmed there. There's a long, so I might put an aggressive position on there. You know, there's no right, when you're doing aggressive drawdown control position, you've failed. It's gone wrong, isn't it? That's why we're doing it. So there's no, you've got to wait for this rule, that rule, the other rule. It's not desperation. It's just, I'm wrong. I need to sort my problem out. And you use everything in your toolkit to solve the problem out. ADR hits, yeah? If something hits ADR, if I'm selling short on this and we hit ADR today, I'm getting in with a big aggressive position. Why? Because I know there's a 42% chance we're not going to go past that level. If we get up to 125, I'm going to hit an aggressive position because there's a 23% chance we're not going to go any higher. So I'm going to get in aggressive. But I'm not necessarily going to wait for a reversal alert, because the reversal alert may not happen until there. It really depends on market structure. It depends on how hard we've pushed. There's all sorts of things that go into the pot. So you get in with aggressive when you are ready to get in, and that tends to be at levels of exhaustion. So you'll find 90% of your aggressive positions will be when RSI is extended. Yeah. The reason I'm getting an aggressive because we've had an aggressive push. After an aggressive push comes a pullback or a reversal. We know that. So when we get extended on RSI, and I see we've done a liquidity run, I get an aggressive. I got an aggressive there as well, because I was expecting, as you can see here, everybody that saw this move, got in short here, has their stop there. So when we came up to here, we took that liquidity and we broke back down below that level, I got in aggressive, because it looked like we'd just done a liquidity run and we were going to drop back down to this gap. We didn't, so I stopped out on it. Yeah, different reasons. So why wouldn't I just trade like that constantly? Because as you can see, most of the time it doesn't work, does it? Loss. Loss, loss, loss. Started to work, loss. Well, break even. Yeah, not one winning trade there, is there? Could you handle that? So that day you lost what? 1, 2, 3, 4, 5% and you had a break even. What's that do to your psychology? Drives you nuts. And this is what I say about in the bootcamp. 99% of people are not psychologically programmed to take loss after loss after loss after loss after loss after loss, and that is why we system hop. Yeah, this doesn't work, this system. No, on to the next. Oh, look. Oh, no, that doesn't work, that system. On to the next. Oh, no, that doesn't work. On to the next. Before you know it, you've blown 3 accounts and you're back to square one. You still haven't got a system that works, have you? Why? Because you're using a stop loss. The market is programmed to take liquidity. Liquidity is in the form of stops and pending orders. Don't use them, otherwise the market will get them. As you can see here, prime example. But yes, you could. I mean, but aggressive drawdown control is just trading normally. I'm risking 0.5% on a trade in the hopes that it works. But don't forget, I'm risking 0.5% on a trade where normally I'm risking a tiny amount. Yeah, my normal lot sizing on oil, for example, is a point. It's not a 0.11. These are aggressive positions I've got on. It's a point. It's not even that. It's a 0.6 because these have had drawdown control done. I haven't got any normal positions on. Let's look at pound US dollar. There we go. So pound US dollar normal position is 0.17 for me. If I was going to take a normal trade with a 0.5% or 1% risk, I'd be entering with something like a 0.3 to a 0.7, 0.5, something like that, wouldn't I? So yeah. When you reach that point, losing a low flat position in the exchange for getting an aggressive and saying a very big percentage of your account is worth it. Yeah, I mean this is the whole point. Aggressive drawdown control isn't something you do on a daily basis. It's something you do when your positions are going against you. Surge. I lost because those trades are against the trend. I don't even know where to start with that comment. Go and watch the Boocamp. I think you might have missed the beginning of this conversation. So anyway, that's aggressive drawdown control. Surge, I didn't lose anything, mate. I made 35% so far in the last 6 weeks. It's just a different way of trading, but I'm not going to go into that now. There's a 5-day course. Go and do that. It's free. Right, so let's have a look at where we are today. Now I've covered that. Hopefully that covers aggressive drawdown control in a bit more detail. Really good example yesterday with everything. So nice to see it unfolding. Right, ADRs. So morning ladder. You are a little late, yes. Slap on the wrist. Half an hour late for class. Right, so nothing's at ADR today. After the moves we had yesterday, not surprised because we had a lot of movement yesterday. Forex Machinist, is that your no, my Forex funds account is this one. I've covered this one already. So banked 0.45 yesterday, 1.35. I'm a little behind at the moment. I need to be banking 2% a week, so I might have to get a little bit more aggressive on this. But I'll see what happens today. If I can get 1.5% in the bank today, I'll be all right. I just need to handle this pound New Zealand. So yeah, nothing's hit there. Weeklies, we've had quite a few hits. We're on Thursday, so there's quite a few weekly hits which are potentially ready to take advantage of. So Aussie CAD is basically looking like it's starting to think about longing. Obviously after the big drop that we had yesterday, there's going to be a lot of mean reversion opportunities on the Australasian pairs. So Aussie CAD potentially is starting to move. We've just done a liquidity run on that this morning, and you just had a reverse, or you're just about to get a reversal alert literally now on M5. So there's potential opportunity there. Aussie dollar, US dollar, again extended. So we've hit 230 pips. So again, another opportunity there. We've just done a run on the lows. So that's starting to play out. We've probably had a reverse alert on that one as well. Not quite. Let me just change the foreground. And there's a few others. So go and have a look at those weeklies if you want to. There's quite a few that have been extended on the weeklies. But most of them are in the wrong direction. The Euros, however, are not. No, we just had a big reversal on that this morning. So, so Euro odd, obviously we're looking short on Euro odd, have been for ages. So that's nicely extended to the upside. I took Euro New Zealand yesterday, remember. I entered a first position on Euro New Zealand yesterday, short. So I've gone the Euro New Zealand version of that rather than the Euro odd. There's Euro New Zealand, so that's extended as well. The pound odd and the pound New Zealand are both the same as well. So pound New Zealand pushed up hard, pound odd has pushed up hard. So you can take any one of those four. They're the same trade basically, those four. Euro and pound and New Zealand and Aussie. So pick one, any one, but I mean you could pick one of each. You could do one Euro, one pound. Personally, I'd kind of clump those together. They're all very, very, very similar. So looking good for short entries up here and looking to target back down at those lows. So yes, you made money, I can see, but you take trades against moving trend, then you recover. Why not go with the trend? Because it's a strategy called mean reversion, Serge. Go and look it up. It's totally different. And I'm not trading against the trend. Yeah, that's a trend. Trading with the trend in mean reversion. Yeah, the DAX is in a downtrend, massive downtrend. I think you're just looking very short term, whereas I'm looking 4 hour, slightly different. But yeah, go and watch the bootcamp. You'll see how I trade. Basically like the banks, not like retail, different. Currently sitting in a tiny bit of DD on Euro New Zealand. Yeah, so any of those are good. Good opportunities for shorts. So obviously the pound ones are better because we've had more strength on the pound this week. They are more extended, but they're all starting to roll over now, so they're all primed to get into. The New Zealand's, there's no bias on the New Zealand at the moment. New Zealand CAD, New Zealand Swiss, very difficult to call a bias on at the minute. Obviously they are bearish based on Swiss franc rate announcement and Canadian, obviously with oil, which is potentially going to pick up. So these are, for me, better shorts. So where we are at the moment is not really where I'm interested in getting in. We've got a lovely range formed on New Zealand dollar Swiss. So technically, we're at the bottom of the range. I'd be much more inclined to take a short at the top of the range, which would be a much better play. But they are extended, both of them on the weeklies. So again, you've got that opportunity. He's come off the bottom of the range, absolutely spot on there. So there's an opportunity for taking it long, but I'd much rather be shorting New Zealand CAD, New Zealand Swiss, and New Zealand US. Obviously that's a short as well. So we are just pulling up, but market structure shifted last week. So again, because we've not had anything bullish or bearish said in FOMC on the US dollar, it's very difficult to know if we're going to get any of that US dollar strength coming through. Morning, Shauk. So I'm undecided on it. If you look at next week's news, it's PMI week next week. We've not really got an awful lot of US dollar. We've got US dollar GDP, which I only do an awful lot. We've got PCE and we've got PMIs, but there's nothing much else on the US dollar, so there's no catalyst coming up from a rate perspective or an FOMC or anything non-farm payroll where they're going to pump it. So I think the US dollar we've got to kind of take with a bit of a pinch of salt at the moment and be kind of slightly neutral to bullish on it. So continuation of trends, which is what I said this morning. After FOMC yesterday, the trends that we've got established with the US dollar, I think we just need to carry on with those. This is a deep pullback on that move, which is now continuing back down to the downside. So not really interested in longs down there, much more interested in shorts when we pull back up. But they are extended on the weeklies and they are extended on the RSIs. So there are opportunities for mean reversion as well there. So hourlies, nothing. 4 hourlies, very little. Euro odd. So Euro odd, very good. I love this on the 4 hour. As I say, Euro odd, Euro New Zealand, don't do both, do one or the other. Australia and New Zealand are the same thing. So pick one or the other of those to go short on. I've taken the Euro New Zealand. But yeah, lovely extension to the upside. Every extension we get on the Euro to the upside is just made to make money. So we're extended, get in. Euro New Zealand, Euro odd, pick one or the other. Personally, I've chosen Euro New Zealand, but I don't think it makes any difference. Whichever you fancy, really. So that's nicely extended. We've got New Zealand dollar Swiss as well, extended to the downside, as we said. We just looked at this one. It's a beautiful technical long from a range. This is a lovely support, but we're in a downtrend, so I want to be taking that short. I don't want to be taking that long, because there will be a point where this range will break, and it's more likely that the trend will continue and will break to the downside, and that can happen at any time. When that does happen, we could go into a very strong down move. Yeah, and I don't want to be caught the wrong side of that. So I want to be up here shorting. I don't really want to be longing, but if you want to take it, the opportunity's there. M15, you haven't had the reversal alert yet, so the structure's still there on M15. We've just done a liquidity run of Asia and yesterday's low. So that M15 reversal alert, if it holds, you could use a stop, go into the lows and trade back up into the highs. And hold it for a couple of days. Could well do that very easily. But looking at news, obviously, we've got no more news this week. Statement of intent you can ignore. So there's no more news this week really that's going to be a catalyst for the Euro, the Swissy, or the Australian or the New Zealand. So you've not really got anything that's going to move the market this week again. Euro Swiss is extended on the daily, which has been extended for absolutely ages, as we know. Don't want to be longing it. We've had 2 days up, so I mean, every flag is breaking on this, so just keep shorting it. Yeah, this has been extended for ages, not interested in longing it. It's the Euro, keep it short. How can you get your template? On the website. So go to the marketstructuretrader.com, put a link in the and then just go to indicators, other indicators and template, and you'll find the zip file in there with all of those indicators and the template file. No more uni students to save us. Yeah, no. We have got sentiment news coming up. Oh no, we haven't. It's Philly Fed, isn't it? Yeah, it's Philly Fed this afternoon. Got Jackson Hole as well next week. You get Jackson Hole's a funny one. It's a 3-day thing, and it's all the bankers basically having a jolly, but there's lots of speakers, and because it's bankers talking to bankers, they tend to be a little bit more relaxed, and you tend to get the odd snippet coming out of Jackson Hole every now and again, which is like, hang on a minute, he hasn't said that before. So you do get the odd whipsaw off of the Jackson Hole Symposium. It's a 3-day event, but the Thursday and the Friday you can quite often get a little bit of a movement, but it's very, 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 very hit and miss. So, but yeah, there's nothing much else coming out, as I say, on the US or anything. So that's really all I've got for you today. Is there any other pairs anybody wants to have a look at? I'm not going to go through every pair. again. I've done it. I did a full overview of every pair yesterday. So Mondays, Wednesdays, and Fridays I normally do that. I'm not here tomorrow, so just so you know, I'm not here tomorrow. Back on Monday. So I'm not going to go through everything. Keep your eyes on 4-hour RSI extensions. But if there's anything you want me to look at, let me know. Most of the moves that we've been in and we've been setting up to get into have all played out now. So it's just a case of managing the positions that I've got at the minute. I'm just waiting. Again, we're a bit of a sideways movement today, so I'm just waiting for these to sort of move. I'll have a look through the indices as well. I haven't covered those yet, so I'll do those quickly. Obviously, oil I covered right at the beginning, but we've got this 3-day spinning top potential reversal coming. So hopefully, see here as well, spinning tops and dojis tend to be part of 3-bar reversal moves. So I've got a good feeling about oil today, especially with the news from yesterday. I think we might get a decent push. We could get an ADR off of it today. But yeah, oil looks good. So reversal alerts on this one. We had yesterday on M15, M5 you would have missed that one as well. Actually no, we're just about to get one on M5. So yeah, I like it long at the moment. We've just done this area to death now, and we've put in a W reversal. We just need to break, forget this spike, this is the news. Yeah, so forget that spike. This is what we need to get. We need to get this on the hourly. We need to get that reversal alert in to show us that we've got this peak formation low, market structure shifted to the upside, and then we can get this move to the up started. 85 is holding very, very nicely. We haven't touched it yet, but 85 to 90 a barrel is kind of really the low that we're seeing being used as a resistance, as support at the moment. So I'm hopeful from here. But we just don't seem to be getting that kick at the minute, so we'll see. Aussie dollar CAD, want to look at? So Aussie dollar CAD, yeah, shorts on the Aussie dollar CAD, not at the moment though. I would look for a pullback on this. So Aussie CAD has hit its weekly range already. Yeah, so we've done weekly range on it. So at the moment, I would expect to get a pullback on this. It's difficult to know where this is going to pull back to. 150 ADR up to that potential, up to that resistance, or somewhere, could come anywhere up to here really. That zone is kind of where I'd see it pulling back to at the most. If you stuck a fib on that, you'd see that's a 61.8 retracement. Yeah. So this zone here. Yeah. So I think we've got a long for a couple of days on this. We've just done a liquidity grab on the lows there. M5 just about to get a reversal alert on that. So some kind of pullback, maybe 50, maybe 38, maybe 60, don't know, somewhere up here I think we're going to pull back before we start the next leg down. So we're looking for that type of movement. A head and shoulders that might actually hold. But right now you don't want to be shorting it down there. So yeah, looking for longs, Shark. But short-term longs, we are in a temporary uptrend on this in the downtrend. So, but I think this is a flag break to the downside. Morning, Neo. Bit late. Any homework for the week? Yeah, trade and make a load of money. Don't give out homework. Yeah, don't give out homework. Don't know, homework. I think did I give out homework in the Boocamp? I can't remember. I had a slide planned for homework, and I can't remember if I left it in or not. I haven't watched the Boocamp for ages. But if you want homework, go into the strategy tester and just watch the market. just watch the market. Or, you know, just see how many times mean reversion works. And pretend you were taking these trades. Pretend you took each of those trades and see what would have happened when you took them. Yeah. So if you ever want homework, you got extended on the RSI there, you'd have scaled in and you got out. There you got extended about there, you'd have scaled in, you'd have got out. Here you got extended there, might have taken a couple, you'd have got out. Here you got extended there, it tanked, you got down to here, you'd have scaled in, you'd have got into drawdown, you'd have escaped up there, and that move. Up there, you'd have got in and out. Down here, you'd have got in and out. Up there, you'd have got in. You'd have been sitting in this one for 3 weeks going, for God's sake, when's this thing ever going to move? And then you'd have got out. You know, just this is homework. The main homework you can do as a trader is giving yourself confidence in your system or strategy. The more times you see this playing out, the more confidence you will have to sit through that drawdown and know that the market is going to take profit, because that's what the market does. That's your homework. US dollar yen. I'll cover the indices in a sec, and gold as well. US dollar yen. So yen is a bit of a mystery at the minute. Obviously, the yen we know the yen is weak, massively weak. Kuroda has put nothing in place to get out of the mess that they're in. They're buying the yen up like crazy. The yen is devaluing, so they're buying something that's devaluing, which is putting them into more financial crisis. They can't stop it, because if they stop it, the yen will devalue further, which will make it more difficult. You know, they're just in a bit of a mess at the moment. They've come up with some really good plans to get themselves out of this issue, but inflation has really screwed it. So for me, I'm long everything against the yen, because I'm short the yen. Unfortunately, at the moment, everything is weak. So we haven't got any real strength, as you can see, on anything. So every piece of strength that we get coming through on the yen batters everything against it. But you can't ignore the fact that we are in an uptrend. We are entering into recession, and we've got inflation going through the roof, which is affecting the whole world. The yen is in the biggest trouble out of the lot of them, really, from a financial perspective with their currency. Therefore, this is the one that's least likely probably to move fastest. So I'll be looking for long opportunities on it. And again, just taking everything you get to the downside. So the entry was last week on this one. But where it's going is difficult to tell. We are currently looking, market structure at the moment obviously is looking like it's short, but we're entering into, or we just have had a kind of symmetrical triangle break out to the upside. So I'll be looking for long opportunities. So any pullbacks on lower time frames at the moment, looking at hourly, any pullbacks long at M15, yeah. Just look for strength to the downside, yeah, which is likely to be profit take moves on pumps. Okay. US dollar yen. Your homework is to return with 40% profit next week. Yeah. I had a guy. Who is it? Oh yeah, no, it's just someone in the Telegram group. Sorry. They were in the Telegram group. Basically saying that they'd done 200% return in the last week on their account. They'd taken a 20k account to a 60 to 60k. It was like pure gambling. I remember something about homework, but it wasn't really structured. Just study something, know how something works. Yeah, that's it. It's all, you know, it's like anything, any job in the world. Yeah, if you're a brain surgeon, you need to know how a brain works. If you're a brain surgeon, you need to know how the tools that you use work. You need to know how to do things in an emergency, when emergencies occur. If you're a sailor, you need to know what happens when you get a hole in your boat. You need to know what happens when the radio breaks. You need to know what happens when your mast snaps and your sail dumps in the water. You just got to know how to use your tools at the end of the day. And the only way you're going to know how to use your tools is to see what happens when things happen. It's conditions. See what happens when conditions in the market happen, and what happens when those conditions are met. That's literally it. The problem everybody has is they are constantly looking for a trade, looking for an entry, and if there isn't one, don't take one. That's the problem. If there's nothing extended, if you're playing mean reversion on the 4-hour chart and the RSI dashboard is flat as a pancake, you ain't got anything to do. Very simple, isn't it? You look at that, you shut it down, you come back in 4 hours and see if there's something there. But we want to be trading all the time. And that's the problem. Everybody's got it. You had homework in the pro course. Oh, it was a pro course, was it? Yeah, okay. Yeah, I don't think I put it into the boot camp because yeah, did that homework. Maybe it's where I remember it from. Yeah, I think I had homework of drawing order block. Oh yes, I think I did give you homework of drawing order blocks, didn't I? Yeah. I'd say practice aggressive drawdown control in the strategy tester. Yeah. So if you've got, I haven't got it on here in the strategy tester, I don't think. I've got, no, I haven't. But get Sphere Tester, which basically allows you to trade in the strategy tester using buy and sell buttons, and you can do aggressive drawdown control practice in the strategy tester. That's the best thing to practice. You know, the first 3 weeks, 4 weeks of running this account, I didn't use any drawdown control at all. Everything just worked out, didn't it? So, you know, once or twice a month you're going to have to do it. So you need to know how to do it. It's an important part of position trading as a strategy. So looking at the indices quickly, obviously we had that move down yesterday. Remember I said yesterday, and it's, God, did they time it any more perfect? I said, didn't I, yesterday? We are going to, in a minute, get one of these whacking great candles that's going to start a cascade effect. Yeah. And lo and behold, yesterday was the day they decided to do it, the day I said it. So that was lovely to see. So we've now got two situations or two scenarios which are going to play out. We're either going to use this as a control candle moving forward, very similar, not to that one, that one. So we're going to use it as a control candle where we are going to basically now do a load of inside bars. So the market has now had a downshift. There's a lot of people caught the wrong side, and we're going to get an accumulation, and then that accumulation will obviously break. And typically that accumulation, when you get a control candle in place that's a new propulsion candle, the accumulation breaks to the way of the control candle, i.e. in this case down. So hopefully we will get that. This is what I would like to see happen, which gives me confidence that we are going to come down and retest all these levels. Can't see it on this one because I haven't got enough data, but we're going to come back down and retest all these COVID levels, pre-COVID levels, and after. But that pre-COVID level is where the market has called, and obviously we are not out of this recession yet. We're not really in the recession yet. So that's kind of what I'm looking for, and we need something to start that off, and that's what happened yesterday. So we got the bearish engulfing across the board on the US indices. Actually, we didn't on the Dow. That's interesting. We got an inside bar on the Dow. S&P we got it, and the Nasdaq we got it. So the Dow's held up better. It's interesting. It's also gapped today. Got a gap fill. I've managed to get that gap filled on the Dow today yet. So yeah, on DAX basically we had much bigger movement. So hopefully we just get that movement to the downside today, but obviously it's going to be exhausted. So we'll see what happens. But as you can see there, we quite often will get multiple inside bars and then we'll get that break. So we could well have an accumulative rotation week ahead. And if that's the case, basically be looking for any kind of push to short it. So very much the same as I've been doing. Yeah. If we push, I'm getting in short. If we get ADR hits, I'm getting in short. If we hit resistance and we look like we're bouncing with a reversal alert, I'm getting in short. So just taking shorts basically within this range. So this area here, basically looking to short it anywhere up the top. If it breaks to the downside and goes, fantastic. That's fine with me as well. But yeah, definitely biased short again now for the moment. But you know, the market might prove us wrong. We'll see what happens. You off, Sammy? Cool, take it easy. So yeah, all indices basically, apart from the Dow, are looking short. We haven't had the alert on the Dow yet, but the rest of them we have. So good break of structure. But for some reason the Dow's held up, so you know, quite possibly we might get that catch up happening on the Dow today. But looking good for shorts. Right, so that's all I've got for you today. My focus at the moment is just managing what I've got on. I'm not looking to add anything new on. As I say, I'm not here tomorrow, so I'm not going to be adding any new positions on. I've got decent exposure. I'm hedged on the New Zealand at the moment, mainly on Aussie New Zealand because I took the Euro New Zealand. So the Euro New Zealand is basically shorted because of the Euro. Aussie New Zealand is longed because of the Aussie. So this one here, if I can get up to somewhere in the region of 1/4 to 0.5% on Aussie New Zealand today, I'll probably just get out of that one completely because I've made so much money on this thing. It's lovely. But you can see I've got TP here at ADR on both of these positions that I've got on, that one and that one. They're both TPing here, which gets me out roughly 0.5%, I think. Oh, where's the other TP gone? Where's that TP gone? So 195, so 200. So yes, just under 0.5%. So an ADR hit to the upside on that gets me flat on Aussie New Zealand, and I'll be out of that one completely, which removes my hedge. So I will just be trading the Euro New Zealand short. Pound, I've got one in profit. Oil, I've got 2 in profit. DAX, I've got 1 almost in profit. So just managing these really, and I will try and get 0.5% in the bank today, just to get myself up to 2.5% for the week, and that'll be me done. That's what put the spanner in this week, which was the DAX aggressive drawdown control positions that failed. But hey, it happens. All right, so that's it for this week. If you need anything, come in the Telegram group. I will be there today. I'm not around tomorrow at all, really. I'm going to a motor show, so I will be on my mobile, but not doing much. Just looking at cars. Very boring. But I'm back on Monday. But any trades that I take or exit, I will, if they're not taken with the EA, obviously. If the EA is taking trades, you know what I'm doing with the EA. The EA just gets in half an ADR apart automatically for me if it's going into drawdown. So EA trades will just be taken. But if I'm taking anything manual or aggressive, I will post in the Telegram group. And obviously if I get out of any positions and go flat or anything, I'll post that as well. But other than that, it's just, you know, adding to the positions as normal, waiting for stuff to move. Alright, so have a good one, guys. I'll be back Monday morning, as I say, but if you need anything, I'm in the Telegram group. Hopefully you have a profitable day. Just be aware, the only news we've got is Philly Fed this afternoon, so apart from that, pretty flat for the rest of the week, so should be just normal price action. Alright, have a good one, and I will see you Monday morning.